Well, taking a look now at British bonds, a 30-year gilt rising alongside the sterling as Rishi Sunak is set to become the next British Prime Minister. Sunak will become the first person of color to take up residence at number 10, with markets cheering expectations of less volatility. Yahoo Finance's Jared Blikre here to break it down. Less volatility, but the bar's pretty low, Jared.
Yay.
After the last 7 weeks, 6 weeks.
I don't think we should be slapping each other on the backs just yet because we still have a lot of central bank actions to go. We're going to get to the BOJ in a second. We got a big meeting this week, but let's take a look at the Wi-Fi Interactive, where I am looking at the British pound versus the U.S. dollar. So up means stronger pound, down means stronger dollar. This is a pretty ho-hum day here. Now, a lot of this news, I think a lot of the news that was moving the market last week was really the resignation of Truss. And so that has been largely priced in. But let me show you a year-to-date picture of the British pound versus the U.S. dollar, down 16%. Now, when I put some candlesticks, you can see the volatile price action probing these lower levels almost back to, I would say back to parity, but I don't think it's ever been there. So that would be a first. Now, you take a look at what's happened with some of their markets like the FTSE. That has been under pressure as well. But the bottom line is that the local markets, that is the pension system, will be ring-fenced by the local central bank, which happens to be the Bank of England over there. That is going to happen. It's going to be locals first. And I think that policy is going to pervade around the world. These central bankers meet quite frequently. However, we obviously have differing goals.
Let's talk about Japan. We've obviously been following the yen. We were just talking on Friday, right, about a potential intervention. It came out after that the BOJ did, in fact, intervene. The levels are not at where they were on Friday, but they're not that much higher.
That's right. And we can see this on the Wi-Fi Interactive again here. Now, this is a 3-month view of the U.S. dollar versus the yen. So higher prices here mean a stronger U.S. dollar and weaker yen. So there is this big outsized candle. These don't look like huge moves, but in currency worlds, these are huge, huge moves. And we saw this volatility get above 150 for the first time in I don't know how many decades here. We saw a decline here based on the yen intervention. That is the Japanese authorities. We don't have official confirmation, but it was released by Nikkei that they had intervened in the market, and they were likely doing this by selling U.S. Treasuries. All of this relates to the U.S. market because if you're selling U.S. Treasuries, guess what? The 30-year in the U.S., well, that is up to 2007 highs right now, and it's a feedback loop. It's a vicious feedback loop that actually strengthens the U.S. dollar so in the long run. So my point is, without further intervention this week, and the market is already discounting this, probably going to end up back at square one.
Go back up to above 150.
Yes.
Yen intervention, is that what we're calling it?
I'm just reading this from other sources. I thought it was pretty catchy.
Yeah, yen intervention, yen intervention. All right, thanks for that, Jared.